this is Joe Rabil with Rabil Stock Research. So what I want to do today, so many of you know and recognize me as the guy who uses indicators in multiple time frames. I look at monthly, weekly, daily charts, sometimes looking at hourly depending on the time frames I'm trading. But I like to use multiple time frame analysis in what I do. All right. Now, but when I started in the business, and I started in the late 80s. I really got into technical analysis probably starting around 1989, 1990. And through almost all of the 90s, I used one single chart with a 20 simple moving average, a 50 simple moving average, and a 200 day moving average. So all on the daily chart, I had a 20, 50, and 200. I used MACD and I used volume. And that was it. That's all I looked at. Now I usually looked at a longer term chart of about 2 years because I was talking to institutions, but I did that for a long period of time. I want to explain why I switched over to multiple time frame analysis and what kind of advantage it offers when you look at it in the way that I have it set up. All right, so let's go ahead and get into that. Right, so I have the chart of the Dow Jones Industrial Average up, and I've got a 20 simple moving average up. I've got a 50 simple moving average and a 200 day. Now, for almost the first 10 years of my career, starting in the late 80s, really it was around 1990 when I really got into charting and technical analysis. I was doing point and figure charts by hand, and then I had this chart. This was about a 2-year daily chart with a 20, 50, and 200 day with volume and a MACD. All right, and this is pretty much it. This is what I used for a long time to help, and I analyzed charts for institutions for several years using this approach. It's fine, you know. The 20 represents sort of the shorter term trend, the 50 would represent the intermediate term trend, and the 200 day would be the longer term trend. And we obviously, when we're looking and talking to institutions, we're looking for periods where we're at a pretty important inflection point where the moving averages like the 50 and the 200, or the 50 and the 20 are coming back down towards the 200 and then emerging again, and we have the potential for another big trend. All right. Now, we would use the MACD as supplemental tool. I have kind of in recent years, over the last 20 years, really since 2000, have kind of taken it to another level in the way that I use it. But we would look for periods where we had corrections back down to the zero line, and it was sort of turning at that point or crossing over to the upside after an extended period below. And, you know, look for signs that maybe momentum is slowing in either direction by, looking at the peaks and the valleys. So that was essentially the way I was using this. All right. And the reason why I decided to switch was because we could see the bigger picture moves. All right. Now, there were times where you get periods where you think you're emerging above the 200, but then it would take a long time to actually get going. All right. And what I found was that looking at that monthly 18 was a big plus for this. If we use that in conjunction with the 200 day or this approach, then your timing is going to improve a lot. But the bigger reason why I switched to multiple time frames was these drops like this. So once we get a trend going and you break the 50, or you're below the 20 and then you break the 50, trying to get back in these pullbacks, I thought was incredibly difficult. You almost had to guess a little bit and, maybe use volume a little bit more, look for volume spikes and all that. And it was fine. And again, I was a very, very good analyst in the 90s. I could see what was taking place. You use a lot of different things like group action. We would look at money flow back then. The MACD would help. We'd look at relative strength. So all of those are factors. All right. But what I found when I switched, so now I'm going to switch over to my setup with a a Dow Jones Industrial Average with 4 time frames. So I've got a monthly here, I've got a weekly, and then a daily, and then an hourly chart. All right. Now, what I find really interesting, there's a couple things that really struck me when I started using this this multiple time frame setup. All right. Number one, that I could start to see 4 different trends. There were 4 different trends that were taking place at the same time. All right. Now, most of my clients at that point were focused in on the long-term trend. All right. And one of my clients who I had been working with for a long, long period of time, he was a small cap growth manager who liked to buy on weakness. All right. He would bring up a lot of stocks that looked like they were breaking down. So I'm going to give you what this looked like on this chart. So it looked like what the Dow Jones looked like here in late 2023. It looks like it's breaking the 200-day. It looks like it's reversing to the downside, right? I mean, and this looks like a complete failure in the pattern. And he would bring up stocks like this. And he loved talking to me because I would say, hey, there's a significant amount of support underneath. This is where the support level is. And he knows fundamentals. And he's saying, look, I'm buying on weakness and I know this is a good opportunity. So I'm going to buy when it's down here. And I'm sitting here thinking, this guy is an idiot. I mean, he's buying breakdowns, even though there was support. But the more we spoke, and the more I would see he's on the cover of Barron's, I see he's one of the top performing small cap managers. I got to give this guy a little bit more credit than I was giving him because I kept on thinking every chart he's bringing up to me looks like crap when I'm looking at it with the 200-day and the 50, and the 50 gets a bear cross, whatever, the 50 crossing down below the 200. This was happening a lot. All right. And so when you switch over and you start to look at multiple time frames, now all of a sudden I'm looking at a 10-year monthly chart and I've got an 18-month moving average. All right. Now that dip, that pullback, what looks like a breakdown pulling back into support is actually a pullback into the rising, or what's now rising. It was falling, but now it's turning at the 18 and the 40-month moving average. All of a sudden, from a long-term standpoint, this chart looks really attractive. And then I could actually add a lot of value to this client. And I started to implement this across the board and realized that by using the 18-month moving average, we can eliminate a lot of the false signals that are used using a 200-day moving average. Now, sometimes you get a lot of momentum to the downside on the break of the 200, and that's maybe going to be the precursor to a break of the 18-month potentially, but that is factored in because we've got 4 different time frames, and we have 4 different trends, but we also have 4 different signs of momentum. Remember, back when I was just using a daily chart with the 20, 50, and 200, I only had this. This was the only momentum indicator I was using. Now, I added in the ADX around 2005, but even using it with what I had, if I had MACD in 4 different time frames, it adds a massive amount of value. Do you see how this is holding above the 0 line and turning back to the upside? As this is turning here. So I'm just pointing out one specific event, but I can tell you for a fact that this happened over and over again, and I started adding a significant amount of more value. Now, the other reason why I think this is so valuable is the fact that I can take advantage of pullbacks so much better now. Looking at these pullbacks on a daily chart as it looks like it's sort of breaking down. I can take advantage of those breakouts on this time frame using my opposing trend strategy, which is essentially taking advantage of corrective patterns, ABC corrections, and looking for entries on the smaller time frame using the help of MACD and ADX. All right, now I'm using this time frame momentum to determine how strong the trend is, and then I'm using this time frame to determine how strong the pullback is, and I can add a significant amount of value to the timing of the event and how many. I get a lot more opportunities using this type of setup. So I thought it was worthwhile just spending a few minutes going through this. Let's go ahead and move on now. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on the services page right now. You can see at the top I've got the advanced trend and momentum courses individually priced for lifetime access, plus you could buy them as a bundle at a discount. And then also the individual package has about 2 to 3 reports each week, plus a special video commentary each week for that package. Also, if you're new to this approach and you want to just learn more about it, you can start with the book I'm offering at a discount right now. My comments are for educational purposes only. Please do your own due diligence before making any investments. All right, I'm going to start out with a couple of indices. I want to look at a commodity chart. I want to look at my favorite crypto pattern right now. And then we're going to talk about one of the Mag 7 stocks that I think could be in trouble here. We'll have to see, but at least something to keep an eye on. And then we'll go through the symbol requests. So let's start out with the QQQ. And what I want to zero in on is what's taking place here as this is attempting to break out. All right. Now, I mean, if you look at this, we did in the S&P, we did eke out a new closing high. I believe this did as well. So we're looking at this pattern that looks like it's trying to emerge after a nice consolidation. Okay. However, I mean, this is not the bar. So let me just zero in on. This is not the kind of bar that I would be looking for a breakout bar. All right, that is not the pattern that we should be on the lookout for. If we got a bar that looks something like this at a breakout, even this one doesn't really appeal to me because you can see we've got pretty good sized bar here and then a strong bar here as it emerges out of this. But then the momentum starts to shrink. You can see that with this tiny little bar. So we want an expansion bar or at least a normal sized bar, right? I mean, at least something that would be somewhere in the middle of average. Ideally, we'd want a monster green bar. If we got a big breakout bar, then that would show signs of real buying pressure. However, in this instance, because we had green bar, green bar, green bar prior to the breakout, this might not be such a bad thing that it's failing here. If we can come down and kind of hold this support area, form a little handle here, all right, then we can break out and not be overbought. Because what I teach is I like to buy on bar number 1 or bar number 2 on a breakout. Bar number 3, bar number 4, bar number 5, I'm not a huge fan of buying upside breakouts after we're up 3 or 4 days in a row. So if we can pause here and then emerge again and again get a decent sized bar that's green on a breakout and clear this area, then I think we have something that that could create some legs. So I would be on the lookout for that for both the QQQ, the NASDAQ, as well as the S&P. All right, let's take a look at the IWM. I just think this is kind of faltering on a relative basis. One of the things I've been talking about over the last month is this big green bar to attempt to break out and then immediate eraser bar, right? King bar, queen bar, bull, or what I would call bear 180, where we just reverse. We go up and then we give it all back. So now we've got this resistance. We've tested it a couple of weeks now. We need to get through it. We need to get through this 230 level. And if we can do that, then I think it might be, more interesting. But I'd like to see green DI kind of kick into gear again. I'd like to see the MACD cross over the signal line, both on the weekly chart. And, especially I would like to see this relative line start to show signs of improvement. Really has been dropping off since late last year and hasn't really recovered from that. So something we got to keep an eye on. Now, an attractive pattern that is developing here is in the commodity index tracking fund. All right. Now, this is heavily weighted towards energy. We've got natural gas actually really kicking into gear here. But look at what's going on this monthly chart. We've gone through this sort of corrective pattern. And MACD, which was really overbought a few years ago, has now worked its way back down towards the zero line, and we don't have a lot of selling stream. But what I wanted to point out is that we look at the quarterly chart. The quarterly chart is actually showing that we were way overbought, had sort of an extreme there at 30, which was a resistance area, and now we've worked it back to the 18 MA on the quarterly chart here. Look at the volume pattern. So I think this is pretty attractive. If I switch this back to the monthly, we can see that this is actually the lower time frame, where the quarterly is the upper time frame. And if we can get a lift off of this, break this downtrend line, show some signs of strength, and kind of emerge out of a low ADX condition, I think this could be the start of something. So I would suggest really keeping an eye on that. Now let's take a look at this one. This is LTC, and it really is, to me, the best looking crypto pattern, all right, at this point. Now, I don't dislike what's going on in Bitcoin, but you can see what's taking place. When we look at this from a bigger picture standpoint, we've been we were knocking our head up against and trying to get through the 100 mark. Now it looks like we're using the 100 mark as support, and the volume pattern is improving. All right, you can see that on the monthly chart. Look at what's going on the weekly. Now, there is a lot of volatility in these crypto patterns, all right? You're just going to have to live with that. But the way this is playing out, it looks to me like pretty strong buying underneath. And there's a pretty good chance that this is a continuation signal, that we could see a breakout and follow through in this one as well. So certainly something to keep an eye on. All right, I wanted to take a hard look at Microsoft. Now, it is still above 18-month moving average, okay? But what I'm watching here is if we break that line, we're also going to have a weekly chart that did not show very strong momentum on the last peak here at a new high last year. The ADX really dropped off, barely made it over the 25 level, and since that time it's just been working down. Now, I see this 400 mark as being incredibly important. I'm not making any calls or anything, but what I'm saying is that if we break 400, I would have a lot of concern for this pattern. We'd be breaking the 18-month line, and we've had work sideways and then breaking the 400 mark. So I think that's a lot different than if we come down here and we break 400 with no signs of distribution yet, okay? Now we come down, we rally up, and this would be, to me, a distribution pattern if we can show some violent break of the 400 mark. We do have a low ADX condition, so we're looking for a breakout or a breakdown either way. And you know, again, that 400 mark, look at the volume pattern, little bit antsy on this one. I'd be watching this pretty closely, certainly if I were in it. All right, let's start going through some of these symbols. So this is on the Toronto Exchange US High Yield Bond Index. All right, now it is holding the 18-month line, but you can see that the MACD is just working its way back up to the 0 level. All right. Now, the question was asked, is this, you know, starting to turn to the upside, or is this just a rally in a downtrend? And the thing is that I just don't know. Right now, I would have to consider it a part of an uptrend because we showed support at the 18-month here. And you can see it in the green, right? We found support at the 18-month, and now it looks like we're respecting it again. Now, I don't know for sure whether this is a turnaround or if this is going to actually fail at this line and turn to the downside. But if I got a trigger on the lower time frames, then I think I would have to respect that and play it for continuation to the upside at this point. The momentum signs are not that great, I'll be the first to admit, but when we're dealing with the high yield bond fund and the pattern itself and the way the price action plays out, sometimes you almost have to discount the ADX a little bit. The MACD is actually in a pretty decent position, and I think it could support a move to the upside. All right, let's look at this LIND. So questions asked about this pinch play as a potential entry point. All right, and I don't have a problem with that pinch play. All right, now what I want to point out here is that this sounded like it was the lower time frame trigger. All right, and what I prefer is for a pinch play to be the higher time frame signal. Now, we don't have that on the higher time frame weekly because the MACD overran here. But we had good enough momentum condition. We have a nice looking base in place. I mean, you can see the way this is developed. This is an overall pretty attractive pattern, okay? But I don't want to trigger myself in using this as a trigger for the lower time frame. In most cases, I'm not looking to do that. All right. If I do, I'd like to see better momentum condition in place on the ADX. However, if we look at this specific spot, let's just actually zoom this in and show you where that green bar came in. That was back at this point, all right, where we were turning, where things were turning back to the upside. So I would go down to the hourly chart in this case, and I would actually wait for another pinch play to develop, which happened right here. So I would be interested in playing this as my trigger. So if I get back-to-back time frames giving a pinch play, then I'm a lot more interested in that. And the reason is I can play this off this time frame risk. I can use two ATRs on this time frame, put the risk down here, and I can hit a target here. Okay, and then, we've got, I believe there's earnings coming not that far away. So if I'm playing in this, I kind of want to play it and be a little bit more nimble in this case. I don't dislike the long-term pattern. Long-term pattern on this looks really good. It really could be the start of something a little bit more significant. I just merely wanted to point out that if I'm playing this for a pinch play, and you actually had two back-to-back pinch plays, I probably want to go down to the smaller time frame to confirm that signal. All right, let's look at SE. Now, SE is a little bit different situation. We had pretty strong move and we got a pullback here, really good momentum condition, but the MACD did overrun. We did not have a pinch play there. So strong momentum in place. So what I'm doing on the daily chart is I'm waiting for this to kick in, and this is where I would have a lot more interest. Now, if you notice, green DI is kicking back into gear, and I'm kind of looking at this as a higher pivot low, not necessarily a pinch play entry, but as a higher pivot low after switching the trend back to the upside and confirming the entry into this signal. Now, I think we need a pullback in this. If I'm in this, I like this pattern. I mean, I think there's some room before we get into some pretty serious resistance. But overall, this looks pretty attractive from that standpoint. Okay, CPNG. I do like the bigger picture look to this, but on the weekly chart, I think this is going to have to wedge in and consolidate. I'd like to see another test of the 18-week, and then if that can turn up, I'd have a lot more interest. You're going to have to play around with this earnings, which is coming on the 25th, so just be aware of that. And then we've got this really dynamic move in BABA developing, big breakout and good volume pattern. We need a pullback. We're up 4 or 5 weeks in a row. We're going to need a pullback, at least a pullback on the daily chart closer to the 18. Beware of earnings. I would let earnings come through and see if that causes a little bit of a pullback and we can play a higher pivot low from there. Thanks for joining me today. If you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn some more about some of these techniques, you can go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.